After 3 years of solid growth driven by massive state spending, it looks like the Russian economy is finally losing steam, with weak growth, widening deficits, and persistent inflation. To make matters worse, in the past couple of weeks, new data has come out showing that oil revenues, one of Russia's few remaining sources of economic strength, have suddenly started to rapidly decline, in part thanks to new US sanctions on Russia's biggest oil companies. Exports are being pushed into longer shipping routes, and the Kremlin has been forced to offer steeper discounts to attract alternative buyers, as its main customers pull back to avoid sanctions exposure. So in this video, we're going to take another look at the Russian economy, and how bad things could get for the Kremlin. Who is the most influential person in the world? Each year, we ask the audience to rank their top 10 most influential people across politics, media, culture, and activism. And now it's time for you to have your say. Click the link in the description to cast your vote for our 2026 ranking. Let's start with some context. As we mentioned, for much of the war, Russia's economy appeared surprisingly resilient, defying early predictions of a rapid collapse. Massive wartime spending helped prop up economic activity in the immediate aftermath of the invasion, and after a contraction in 2022, Russia's GDP rebounded, with growth coming in above 4% in both 2023 and 2024, softening the impact of Western sanctions. As one of the world's largest oil exporters, alongside Saudi Arabia and the US, Russia financed much of this splurge in military spending through oil revenues, which were in turn boosted by high global energy prices. For context, when Putin launched the invasion, Brent crude, the global benchmark, was trading at roughly $100 per barrel, and in the months that followed, geopolitical turmoil pushed prices even higher, reaching a sustained peak of around $123 by mid-June. Gas prices followed a similar pattern, with prices skyrocketing as European countries desperately tried to stock up on gas before the winter, reaching a high of around €350 per megawatt hour in mid-August 2022. Even though Russia was selling its oil at a discount, these high oil and gas prices were still great news for the Kremlin's budget. Analysis by the Center for Research on Energy and Clean Air found that Russia's hydrocarbon export revenues were about 20% higher than average, running at nearly €1 billion per day. These enormous revenues allowed Russia to massively increase spending, giving Putin the fiscal space to continue and expand his invasion of Ukraine. Even when the EU imposed an embargo on Russian oil, Russia was able to quickly shift its exports to Asia, especially India and China. Despite a slight decrease, energy revenues continued to remain pretty stable over the next 3 years. This was great news for the Kremlin, and provided Russia with a reliable source of foreign currency, even when the rest of the economy started looking shaky. For context, as we've mentioned in previous videos, Russia's wartime spending has pushed up inflation and forced the Russian central bank to dramatically hike interest rates. While these dramatic hikes have apparently succeeded in bringing inflation down a bit, it's still running above 7% year on year, and high rates have slowed the Russian economy to the brink of a recession. Nonetheless, even if the domestic economy was looking a little dysfunctional, oil and gas revenues provided the Kremlin with a reliable source of revenue to fund the war. However, earlier last month, the US announced fresh sanctions on Russia's two biggest oil companies, Rosneft and Lukoil. This was a pretty significant move, and the first time the Trump administration has actually imposed new sanctions, something Trump has threatened to do on multiple occasions. These sanctions come on top of the EU's 19th sanctions package, which includes a ban on imports of Russian liquefied natural gas, and an apparent deal between Trump and Indian Prime Minister Narendra Modi for India to reduce its oil imports from Russia. To avoid falling foul of Trump's new sanctions, both India and China have sharply reduced their purchases of Russian oil and shifted towards alternatives, such as Saudi crude. Indian refineries have cut back particularly hard. Imports of Russian oil are expected to plunge to around 600,000 to 650,000 barrels per day in December, down from 1.87 million barrels per day in November and 1.65 million barrels per day in October. China is following a similar path. State-owned giants Sinopec and PetroChina, along with several smaller private refiners, have suspended direct purchases, a move that has disrupted nearly 45% of Russia's oil exports to China. At the same time, global market conditions are dealing another blow to Russia's oil revenues. Global oil prices have fallen pretty steadily since July, as OPEC Plus increases production and global economic growth slows, raising fears of an oil glut in 2026. Meanwhile, Russia's flagship Urals crude has been trading at a deep discount to global benchmarks. In November, that discount widened to roughly 23% below Brent, the largest in more than a year. Some reported loadings fell into the mid-$30 per barrel, the lowest since the depths of the 2022 price collapse. Russia is now expected to collect roughly 520 billion rubles, that's around about $6.6 billion, from oil and gas in November. That represents a 35% decline from a year ago and a meaningful drop even from October. With oil revenue shrinking, Russia's budget deficit is growing. Currently, the deficit is around 2.8% of GDP, but as a fifth of all spending happens in December, that's expected to increase to as much as 3.4% of GDP by the end of the year, the biggest deficit since the first year of the war in Ukraine. Without access to international credit markets, the Russian Finance Ministry has been forced to find other routes to plug the deficit, including tax hikes, with the basic VAT rate rising 20% to 22% starting in January. Aside from oil revenues, VAT is one of the government's most important revenue sources, accounting for about 38% of total federal revenue. The Kremlin hopes that this increase will bring in an estimated 0.5% of GDP. Alongside the increase, other measures introduced by the Kremlin included cutting tax breaks for small businesses, placing new levies on imported technology and cars, and increasing duties on gambling, which all goes against Putin's earlier promise not to raise taxes again before 2030. The Kremlin is even apparently selling physical gold from its national wealth fund for the first time since the war. For context, after the invasion of Ukraine and sweeping Western sanctions, gold and the yuan were the only two assets that remained liquid and usable. Over the course of the war, Russia duly built up massive gold reserves, peaking at over 2,300 tons, the fifth largest in the world. However, these reserves have since been depleted. According to Bloomberg, 2/3 of the fund has been spent since the war began, and its liquid assets have fallen below 3 trillion rubles, the lowest level since 2019. All in all, the Russian economy is clearly showing real signs of strain, and this should provide some encouragement to American and European politicians, who sometimes seem to tacitly accept Putin's narrative that he has no incentive to make concessions in Ukraine. Now, that's quite a lot of information we've thrown your way, and that's after we've simplified it down for you. So you can only imagine how overwhelming it is to sift through the hundreds of outlets reporting on it online to just find out what happened. Luckily for all of us, there's a website and app that collects all those articles and puts them all in one easy-to-access place. And that website is, you guessed it, Ground News. Not only does Ground News assemble all these articles, but it also offers a breakdown into bias distribution, factuality, and ownership of each individual source, giving you the opportunity to dive deep into the information that may have been hidden from you previously. For example, if we take this story on the Kremlin grappling with depleting oil revenues, we can see that there are 25 sources currently reporting on it, with most of the coverage coming from the left. If we use their handy bias comparison feature, we can see that the left is framing it as a severe crisis for Putin, while centre-left coverage conversely employs a more neutral tone, describing the economy as losing steam. We can also filter and sort every story by their factuality level, helping you to easily grasp the reliability of each outlet. Or even take a more extensive look at who owns each of these outlets, keeping you fully informed on who's trying to feed you information online. Even if you want to stay close to home and explore what's being said in your area, Ground News can break down all of your local news, and even shows you stories you might have missed, introducing you to their blind spot feature. Here you can discover everything that's being disproportionately reported by one side or the other, whether it's a mile from your house or on the other side of the world. That's just scratching the surface of what Ground News has to offer. So if you're interested, there's no better time to sign up, as we're partnering with them to offer 40% off their unlimited access Vantage plan. And just in time for the holiday season, you can even gift a subscription to a friend or family member for the same 40% discount. All you have to do is subscribe through the link in the description, go to ground.news/TLDR or scan the QR code on screen, and you'll be supporting an independent news platform working to make the media landscape more transparent.